I'm Jerome Lee and welcome to this edition of Phillip Futures Market Watch. We have passed the midway for 2016. Today we'll do a recap for the past 6 months for gold prices. After suffering from falling prices for 3 years, from 2013 to 2015, gold reached its low of $1,064 per ounce in December 2015. Since then, the price of gold has rocketed. It has risen more than 30% against the US dollar since the start of 2016. This strong upward movement in gold is largely due to an overall uncertain global economic landscape, largely contributed by several factors such as negative interest rates by central banks, UK's EU referendum, the US presidential elections, and the overall heightening tensions in the Middle East. Negative interest rate policies by central bank. There are currently 5 central banks which have adopted negative interest rates. They are Denmark's National Bank, the Sveriges Riksbank, the European Central Bank, the Swiss National Bank, and the Bank of Japan. Negative interest rate policies is generally seen as a last-ditch effort by central banks to stimulate the economy when traditional policies do not seem to be effective. In terms of effectiveness, we can use Japan as an example, as it is the most recent major economy to introduce negative interest rates. On the day of its introduction, the Japanese yen weakened against the US dollar by almost 5%. to a high of 121 Japanese yen per US dollar, from a low of 118. Since then, price has started to reverse, with the Japanese yen strengthening steadily against the US dollar. It is currently trading close to 100 Japanese yen per US dollar. Hence, we can see that in the short term, the negative interest rates policy may not be as effective as central banks wish it to be, and they may be introducing more drastic measures in the future. UK's referendum on EU membership. On 24th June 2016, the UK held a vote on whether they should stay or leave the EU. The result to leave was largely unexpected and sent shockwaves throughout the financial markets. The sterling pound spiraled more than 11% against the US dollar, while at the same time, global equities market melted down with more than $2 trillion in value loss. US presidential elections. The ongoing US presidential elections is a hotly debated and widely followed event, even by investors outside of the United States. Because any major upheavals within the USA could potentially have a large impact outside of beyond its shores. This is due to US being one of the largest first world economies in the world. While all these factors continue to fuel uncertainty in the market, investors planning to hedge their risks will be looking at potential safe haven assets. Gold being one of the most popular throughout the history. This is one of the main reasons why gold tends to thrive during periods of economic and financial uncertainty. From a technical analysis view of gold, we'll try to answer the question in most investors' mind, which is, has the downward trend for gold come to an end? And are we in the early stages of this upward trend? Looking at the chart of gold price in US dollars, if we will take the lowest and the highest point of price in the last 20 years and use those points as reference for Fibonacci retracement, we can see that the downward movement in gold prices since 2011 has only been a 50% retracement of this overall upward move. Hence, we can see that on a very broad timeline, this downward move has only been a retracement, and the overall upward trend of gold had not been broken yet and could have resumed in 2016. With both fundamental and technical points taken together, this would mean that there is a strong case for gold to be heading higher, at least in the mid or to long term. The next event which could potentially drive gold prices would be the next FOMC meetings in September and December, as everyone from investors to analysts, myself included, will be watching with their eyes peeled to see if the Federal Reserve will be looking to hike its rates. And with that, we have come to the end of this edition of Phillip Futures Market Watch. Thank you for watching me. I'm Jerome Lee, and I hope to see you again in our next edition.